The Nightly Business Report.
Good evening. Tonight, one of the main forces behind Sri Lanka's economic expansion is the country's domestic assembly and car component manufacturing industry. With the goal of regaining Sri Lanka's reputation as a Ratnadipa, the Sri Lankan Gem and Jewellery Association has demanded immediate governmental changes to boost growth and international competitiveness. After a protracted period of upward movement, the market saw downward momentum on the first trading day of the week, with both the ASPI and the S&P SL20 indices displaying a dip. And in order to create an ultra-fast electric vehicle charging network, Volkswagen and Chinese EV manufacturer Xpeng have agreed to extend their collaboration and make their current Chinese networks available to each other's clientele.
From Studio 24, here's Sanuvi Mudanayaka.
Good evening and thank you for joining us. Sri Lanka's local assembly and automotive component manufacturing sector has emerged as a key driver of the nation's economic growth. With a focus on job creation, foreign exchange conservation and technical innovation, the industry has become a vital pillar in the country's economy, contributing to its industrial advancements and global competitiveness.
Sri Lanka's automotive assembly and component manufacturing sector, operating under the Ministry of Industry's Standard Operating Procedure, has become a cornerstone of the nation's economy. The industry carefully features over 17 assembly plants, including vehicles such as motor cars, SUVs, motorcycles and electric three-wheelers, with 17 more investors set to launch operations. With more than 5,000 skilled workers directly employed, including graduates and trainees, the sector also supports over 10,000 indirect jobs, fostering a robust ecosystem. The temporary suspension of vehicle imports highlighted the strategic importance of local manufacturing, reducing reliance on imported completely built units and preserving foreign exchange. Global automotive giants like Hyundai, TVS, Bajaj Mahindra and Tata have expanded their presence in Sri Lanka, underlining the country's appeal to international brands. The growth of this sector not only drives technical innovation but also contributes significantly to the development of Sri Lanka's human capital and economic resilience.
Sri Lanka's Inland Revenue Department has achieved its highest ever tax revenue collection in 2024, totaling 1,958,088 million rupees. This includes 1,023,207 million rupees in income taxes and 714,684 million rupees in value-added tax. The total revenue for the year marks an impressive increase of 392,229 million rupees compared to 2023. This surge represents a growth rate of 25.1%, highlighting the country's improved tax collecting efficiency. The department's success in boosting revenue is seen as a positive indicator of economic recovery and fiscal management. Officials have praised the efforts behind the record-breaking performance, signaling a strong foundation for future financial stability. The Sri Lanka Gem and Jewellery Association has called for urgent policy reforms to revive growth and enhance global competitiveness, aiming to restore Sri Lanka's title as Ratnadipa.
Sri Lanka Gem and Jewellery Association President Akram Kasim has highlighted the industry's potential to become a significant foreign exchange earner while creating widespread employment opportunities. Speaking at the inauguration of the Facets Sri Lanka 2025, he stressed the need for policy reform to address challenges like high taxation and rigid import-export regulations, which have led some businesses to relocate abroad. Kasim called for streamlined regulatory processes and improved ease of doing business to strengthen the sector. The 31st edition of the Facets Sri Lanka was inaugurated by President Anurakumara Dissanayake in Colombo, organized by the SLGJA in partnership with the National Gem and Jewellery Authority and the Export Development Board. Kasim also emphasized the untapped potential for closer collaboration with the tourism sector, proposing partnerships with Sri Lanka Tourism and Sri Lankan Airlines. The integration could offer unique experiences to tourism, enhancing the global appeal for Sri Lanka's gem and jewellery industry.
The port city Colombo took a significant step forward last week by breaking ground on its highly anticipated marina development, a project set to enhance the city's business appeal and overall attractiveness.
The marina at Port City Colombo, a joint venture between China Harbour and Engineering Corporation, Browns Investments plc and LOLC Holdings plc officially broke ground last week. Foreign Affairs and Tourism Minister Vijay Heras graced the event as the chief guest. The development will feature a state-of-the-art marina capable of accommodating 243 marine vessels, along with the exclusive guest clubs, dining, retail outlets, recreational areas, event spaces and parking facilities. This ambitious project is poised to position Colombo Port City as a premier destination for marine tourism and recreation. The initiative is expected to drive significant economic growth in the area. The project is also expected to attract international investments, further enhancing the region's global competitiveness. As part of the government's vision, the marina development aims to create long-term job opportunities and elevate Colombo's status as a leading marine hub in the region.
The Ministry of Industries and Entrepreneurship Development has outlined its efforts to drive industrialization and foster entrepreneurship in Sri Lanka, detailing key initiatives and future plans. Deputy Minister Chaturanga Singha highlighted the ministry's core objectives, which include policy development, industry support, business creation, and promoting entrepreneurship. The ministry is also focused on supporting traditional industries, developing SMEs, and enhancing export promotion. It oversees 29 institutions, including notable entities like the IDB, SED, NEDA, and the EDB, which play a crucial role in driving economic growth. The ministry's initiatives also extend to managing state-owned enterprises across various sectors, such as minerals, sugar, textiles, and ceramics. Let's take a short break now. This is a nightly business report. Welcome back to the nightly business report. The market experienced downward momentum on the first trading day of the week, with both the ASPI and the S&P SL20 indices also showing a decline, marking a shift after a long period of upward movement. For further insights, we speak with Ranjan Ranathunga from First Capital Holdings.
The Colombo Bulls continued to witness a volatile trading session as the market saw selling pressure extend to another day, with panic selling by retailers, bringing down the ASPI by 170 points to close the day at 15,878. The banking sector shares were amongst the biggest negative contributors to the index, with Sampath Bank, Commercial and NDB among the biggest negative contributors to the index. Despite the active selling pressure in the market, Browns Investments saw increased retail activity, aided by the commencement of the groundbreaking work at the marina development at Port City Colombo. This resulted with Browns Investments recording a price gain of 2.6% during the day. Moreover, since the announcement of the share subdivision on Friday on Watawala plantations, active retail participation was centered on the share and was amongst the top positive contributors to the day. Meanwhile, the turnover surpassed 8 billion and recorded a gain of 21.7% against the monthly average of 7 billion during the day. The top losers for the day were UB Finance, HDFC Bank, Nations Trust Bank non-voting, and TES Agro, while the top gainers for the day were SMB Finance non-voting, Pan Asia Power, LVEF Energy Fund, and Watawala Plantations. Thank you.
The market is expected to continue building on last week's strong performance, with the ASPI surpassing the 16,000 mark. However, after facing downward momentum on the first trading day of the week, it remains uncertain how the market will evolve as the week progresses. For further insights, we speak with Demantha Matthews from First Capital Holdings.
As we saw during today's day, we expect the market to continue on this profit-taking sentiment towards the coming week as well, mainly due to the significant gains that were observed in the equity markets since September 21st, where after the elections, presidential elections, the market has gained about 60%. So with the profit-taking emerging, we may see the market come down in the coming week as well. However, going forward, we may see buying interest resurfacing again in the market, especially on the fundamentally sound companies like banks finance companies, then we have tourism, as well as consumer shares. While we may see buying interest creeping up for these amidst selling pressure that are there in the market as well. Moreover, looking at the valuations of the equity market, the market is currently trading at a 9 times PE, while in terms of price to book value, the market is currently at 1.2 times. But looking at the history, what we have seen is that on average, the market trades at a PE of 12 times during good days. And given that we have very low interest rates, below 10% right now, we may see a shift in funds from fixed income to equities, while further boosting the potential for equities in the coming months as well. Also, as we mentioned before, given that the oil share price index is at a relatively lower discount, at a higher discount to the past average of 12 times, we may see both retailers as well as high net worth investors together with the institutions coming and taking up companies that are strong in fundamental valuations. Thank you.
Gold prices edged lower in Asian trading today, weighed down by a stronger dollar, as expectations of a slower pace of monetary easing kept traders favouring the greenback. Spot gold dipped 0.1% to $2,635.81 an ounce, while February gold futures fell 0.3% to $2,646.51 an ounce. The precious metal has been steadily losing ground since late December, following the Federal Reserve's indication that it will slow the pace of interest rate cuts in 2025. The dollar's recent rally has been fueled by this outlook, with additional pressure coming from hawkish comments made by some Fed officials over the weekend. Oil prices reached a more than 2-month high in Asian trading today, driven by improving demand prospects in China, the world's top oil importer. Brent oil futures for March rose 0.2% to $76.63 per barrel, while West Texas Intermediate crude also increased by 0.2%, reaching $73.36 per barrel. Crude prices have now gained for 2 consecutive weeks, buoyed by expectations of enhanced demand in China, especially as Beijing prepares to roll out additional stimulus measures in the coming months. Additionally, colder weather in the US and Europe is expected to further drive oil demand, particularly for distillates. However, the dollar's strength, reaching more than a 2-year high ahead of critical economic reports this week, capped any significant price surges in crude. The Sri Lankan rupee has experienced a slight depreciation against the US dollar today compared to last week. According to the Central Bank of Sri Lanka, both the buying and selling rates of the US dollar have increased. Let's now take a look at how the Sri Lankan rupee is performing against other major global currencies. A short break now. This is a nightly business report. Welcome back. Cargill's Bank, in partnership with MasterCard, has launched Tap It, Sri Lanka's first ever contactless sticker payment card, aiming to make payments faster, simpler and more convenient for customers.
Cargill's Bank, in collaboration with MasterCard, has launched Tap It, Sri Lanka's first ever contactless sticker payment card, designed to revolutionize payment experiences. Available in both debit and credit card forms, Tap It allows users to make transactions by simply tapping the sticker at the merchant's point-of-sale terminal. Powered by MasterCard PayPass and utilizing near-field communication technology, Tap It ensures secure and efficient payments with EMV chip technology and encrypted features for added protection. The innovative sticker sticker can be affixed to a phone or any commonly carried item, eliminating the need for a physical card or wallet. Customers will also receive instant SMS notifications for every transaction, enhancing security and control. The launch of Tap It underscores Cargill Bank's commitment to digital transformation and improving customer experiences in the evolving fintech landscape.
Lanka IOC PLC has appointed S. Ranganathan and Manil Jayasinghe as independent non-executive directors. Ranganathan, the former managing director / CEO of Commercial Bank of Ceylon PLC, has held several senior positions within the bank and also served as managing director of Commercial Development Company PLC and deputy chairman of Commercial Bank of Maldives Limited. Manil Jayasinghe, a fellow member of multiple prestigious accounting institutes, brings over 41 years of experience across advisory and industry sectors in Sri Lanka, Maldives and Bhutan. He previously served as the country managing partner of Ernst & Young Sri Lanka and Maldives from 2001 to 2023 and held key roles in assurance and professional practice from 2003 to 2023. The new appointments reflect Lanka IOC's commitment to strengthening its leadership with experienced professionals. Their extensive backgrounds in finance and management are expected to contribute significantly to the company's growth and strategic direction. Mogo Media Academy becomes platinum sponsor for edX Expo 2025, reinforcing its commitment to shaping Sri Lanka's future in media and creativity.
Mogo Media Academy, as a platinum sponsor of edX Expo 2025, invites students, parents and professionals to visit its stalls, explore the dynamic fields of animation, game development, concept art, 3D modeling, texturing and VFX. At the event, attendees will gain insights into promising career paths and learn about the Academy's specialized programs designed to meet industry needs. In addition, the Academy is launching 3 cutting-edge diploma programs: radio and television production, news journalism and production and television post-production. These one-year diplomas offer hands-on education aimed at individuals seeking careers in media, broadcasting and creative industries. Mogo Media Academy's presence at edX Expo underscores its commitment to bridging gaps in Sri Lanka's educational landscape. The Expo, marking its 21st anniversary, remains the country's premium platform for education and career development.
Cargill Bank has teamed up with Sampath Information Technology Solutions to launch gold loans and pawning facilities for the first time in its history. This partnership, powered by SIT's flagship product Prime, marks a major step in enhancing financial accessibility and business growth through innovative technology. The fully digitized process, ranging from onboarding and risk assessment to loan disbursal, is fast, secure and paperless, ensuring minimal waiting times and increased transparency for customers. Cargill Bank chose SITs for its extensive experience in fintech and its ability to provide island-wide 24/7 support with seamless operations. The use of an agile framework allowed for rapid development and deployment of Prime, delivering a solution that exceeded expectations. With advanced risk assessment tools, Prime enables data-driven lending decisions, ensuring safe and sustainable gold loan practices. A delegation from SEAT, led by Managing Director and CEO Arnab Banerjee, recently met with Sri Lanka Export Development Board Chairman Mangala Vijayasinghe to discuss trade expansion opportunities. Banerjee shared an overview of RPG's operations in various sectors, including agriculture, engineering and rubber. The delegation expressed interest in expanding SEAT's footprint in Sri Lanka, particularly by diversifying its product portfolio within the rubber sector. Banerjee also highlighted the recent acquisition of Camso brand, now produced in Sri Lanka under RPG's ownership. Vijayasinghe praised SEAT's expansion initiatives and highlighted further investment opportunities in pharmaceuticals, ICT, agriculture and logistics. Senior officials from both SEAT and the ETB, including SEAT CFO Vipul Wade and ETB board member Tusara Heti Tanjage, attended the meeting. Let's take a short commercial break. Global business updates coming on the other side. This is a nightly business report. Welcome back to the Nightly Business Report. Most Asian stocks traded in a narrow range today as investors adopted a risk-averse stance ahead of a busy week of key economic data releases. Hawkish comments from the Federal Reserve also weighed on sentiment. Japan's Nikkei 225 index dropped 1.3%, while the Border Topics index fell 0.9%, both slipping in catch-up trade after an extended New Year holiday. Meanwhile, China's Shanghai Shenzhen CSI 300 and Shanghai Composite indexes showed little movement, as did Hong Kong's Hang Seng index. In contrast, South Korea's Kospi bucked the trend, rising 1.6% as investors took advantage of heavily discounted stocks following steep losses caused by political turmoil in December. Volkswagen and Chinese EV maker Xpeng have decided to expand their partnership to build an ultra-fast charging network for electric cars, opening their existing Chinese networks to each other's customers.
Volkswagen is deepening its ties with Chinese EV maker Xpeng. The pair said Monday that they would expand their partnership to build an ultra-fast charging network for electric cars. They will open their existing Chinese networks to each other's customers. That covers about 20,000 charging systems across 420 cities in the country. And they will explore joint construction of new co-branded sites. Xpeng and VW first formed a partnership in 2023. At the time, the German giant bought a stake of almost 5% in the Chinese firm for $700 million. The company said they would jointly launch 2 VW-branded EVs in China by 2026. Volkswagen later said it had worked with Xpeng to develop a new architecture for intelligent and electric cars. It said that would allow it to offer more affordable EVs in its biggest market.
Rivian surpassed analysts' expectations for fourth quarter deliveries and said its production was no longer constrained by component shortage, a positive sign for the electric vehicle maker aiming to turn its first profit.
Shares of electric vehicle maker Rivian surged more than 20% Friday morning after it surpassed analysts' expectations for fourth quarter deliveries and said its production was no longer constrained by a component shortage. The low supply of the part used in its R1 SUV and R1T pickups, as well as its delivery vans, started in the third quarter and forced Rivian to slash its annual production target in October. Deliveries jumped 42% from the previous quarter and hit their highest level in more than a year. For 2024, production came in at 49,476 vehicles, down about 13% from a year earlier, but above the company's lowered target of between 47,000 and 49,000 units. One analyst said Rivian benefited from improved production coupled with its focused product strategy. Thursday, larger rival Tesla reported its first fall in yearly deliveries, weighed down by the EV pioneer's aging lineup. Rivian has cut costs sharply by renegotiating supplier contracts and revamping its manufacturing processes to try to become profitable. It also closed a $5.8 billion investment from German automaker Volkswagen as part of their technology joint venture. Rivian reports fourth quarter results next month.
That's all from us on the Nightly Business Report for today. We'll see you again tomorrow with the latest updates in the business globe. Until then, I am Sandhya Nayaka. Thank you for watching and have a good night.